Padini was founded by Yon Pan Chow in 1975. The company is established as a retail industry and they sell products like clothing, shoes, bags, belts, sunglasses, leather goods, necklaces, and other fashion accessories that caters for all ages. The company's headquarters are in Malaysia and Hong Kong. Padini began as a backer operation in Malaysia's apparel industry, manufacturing, trading, wholesaling, and supplying garments to order for retailers and distributors. Overall, there are a total of 330 stores in countries such as Brunei, Kuwait, Indonesia, Myanmar, Philippines, UAE, and even Thailand. Padini Holding Bhd shows uptrend movement from 2016 to 2020 for current ratios. The current ratio in year 2020 performed better than previous year. It indicates that the company could survive the claim of short-term creditor are covered by current asset. Next, quick ratios. Padini Holding Bhd shows uptrend movement from 2016 to 2019 and remains same until year 2020 for quick ratios. In this ratio, we can state that the company performs better in 2019 and 2020. This indicates that Padini Holding Bhd had better skills in meeting their short-term obligation without having to rely on other liquid assets such as inventory. For net working capital, Padini Holding Bhd shows uptrend movement from 2016 until 2019 and slightly decreased in 2020. The company performs better in 2019 than other years. This explains that Padini has created additional funds and they could use it to invest in other activities. Overall, Padini Holding Bhd has healthy performance in liquidity ratios throughout the years.
I will continue with the leverage ratio, and the first ratio is the debt ratio. The formula is total debt divided by total asset. From the graph, we can see Padini Holding Bhd has an improvement from year 2016 to 2019, but it has a worse in 2020. From this, we can analyze that 2020 Padini Holding Bhd has a higher amount of debt to finance the asset. The next ratio is debt equity ratio, and the formula is total debt divided by the shareholders' equity. Okay, from the calculation and the graph, we can see that Padini Holding Bhd has an increased trend from year 2016 to 2019. In year 2020, the trend dropped until 82.5%, and we can conclude that Padini Holding Bhd has a higher debt compared to another in year 2020. The last ratio is time interest earning. The formula is EBIT divided by the interest. We can analyze that in 2019, the time interest earning is higher compared to others. So, Padini Holding Bhd has no problem to meet a loan requirement and lower probability on risk default in year 2019. I will proceed with activity ratio. The first ratio is invest turnover. Okay, the formula for invest turnover is cost of goods sales divided by the inventory. From the calculation, we can see that invest turnover ratio is higher in year 2070 compared to another. It indicates that Padini Holding Bhd is more effective in using inventory to generate sales in 2070 than other. The next ratio is total assets turnover, and the formula is net sales divided by the total assets. From the calculation, we can conclude that total asset turnover in 2020 is lower compared to another. It shows that in 2020, Padini Holding Bhd are not effective in using the total asset to generate the sales compared to another. The next ratio is average collect period, and the formula is account receivable divided by net sales per day. Okay, based on the graph, we can analyze that the account collect periods in year 2017 is higher compared to another. It shows that Padini Holding Bhd in year 2017 has problems towards to collecting the debt.
Thank you to my friend for this explanation. Now, I will analyze the profitability ratio. From the above results, the graph gross profit margin for Padini Holding Bhd is fluctuation in 5 years. We can see that in year 2016, the gross profit rate is better compared to other years. This shown that in 2016, the company able control the cost of goods sales relative to its sales revenue compared to other years, and can conclude that year 2016 is the best performing. Next, the graph of operating profit margin is fluctuation in 5 years. In this analysis, we found out that the operating profit margin has downtrend in year 2016 to 2017 and year 2018 to 2020, but has uptrend in year 2017 to 2018. We think that year 2018 is the best performing because higher ratio indicates more effective in converting revenue into actual profit. Then, we can see that the graph net profit margin for Padini is fluctuation in 5 years. In this analysis, we can see that have downtrend to year 2016 to 2017 and 2018 to 2020, but have uptrend 2017 to 2018. We think that year 2018 is the best performing because higher ratio means that have more ability to get higher returns, indicate a better growth prospect.
For market ratio, I'm going to explain about earning per share and price earning ratio. For earning per share, it shows a downtrend movement for each year. We can see that earning per share has huge decrease from 2016 to 2020, which is 29.2% in 2016 to 9.82% in 2020. The decreasing earning per share give a poor indication about the health of the company and give lower return to the shareholder. Meanwhile, the price-earning ratio is stable for 4 years, and in year 2020, the company has huge increased price-earning ratio, which is from 4.79 in 2016 to 9.79 in 2020. Because of the increase, high earning and rising dividend typically lead to a higher stock price. In conclusion, in 2017, Padini have higher of the sale because impact of an expand outlet in the Asian market with the subsidiary in Cambodia. However, in 2019 and 2020, Padini Holding Bhd take decision to downsizing their outlet. This is because of the impact of outbreak COVID-19 that affect the consumer spending.